Now, the old way is a business wanted a loan, they go to their big, what we call slow and no bank, because they're very slow and they like to say no. That's a fact. Business owners get frustrated. If you're a business owner, you know this experience. Even if you have a successful, profitable business, growing, it's very difficult, almost impossible to get a loan if it's under $500,000. And if it goes higher than that, you've got 3 months of processing, collateral, you're putting up plants, equipment, resources. They want a seat on your board. It's a very slow and no process. The new way, fintech, using financial technology to give approvals quickly. We have alternative lenders who love to loan money to small business owners. You refer that client to us. Our alternative lenders look at that package. We solicit that package from the client. You refer them to us, we get the package. Our alternative lenders look at it, they present an offer for the client becomes happy, gets their funds in under a week. Now, we have many different lending relationships. We're an ISO or independent sales organization for all of the top alternative lenders. What does that mean? Well, a business owner may go to one alternative lender, it may be good for them, but we represent all of the best. They come to us, we have all of the best look at it. Many lenders equals best prices for the clients. Also means quick approvals because they want to get an offer to us quickly. And the only lenders we'll deal with are lenders who will give an approval in one day. Now, if it's a poor credit situation or it's a decline, we may work it for another 2 days or so before we say it's decline and we try to turn it into approval. But if it's not a decline, we have an answer in a day. Now, sometimes we'll turn it into approval in 3 days from a decline to approved. But that's how quick these lenders are. There's no license required of you, again, to be an agent. Now, our lenders are better. Why? Well, number one, they want to say yes. They focus on small business. They don't have checking accounts, savings accounts, CDs. They only make money by helping small business owners gain access to capital. And see, they value your cash flow, a business's cash flow, over their credit score. So someone can have poor credit from making their business successful, not paying themselves, etc., but they have great cash flow in the business. That's valued by our lenders. It's not valued by the slow and no banks. You got poor credit, you're not getting approved, even if you have great revenue. Not with us. If you have cash flow, that's viewed more than your credit score. Now, again, I've said simple and fast, approved in 1 day, funded in under 5. Our average loan is $10,000 to $500,000. We can go more. Generally, the amount the company is approved for is the amount they're doing in monthly sales. These are short-term working capital loans, paid off in generally 3 to 24 months, so they can't get $1 million when they're only doing $100,000 in sales. They wouldn't be able to pay it off in 3 to 24 months. So generally, what happens is they get approved for an amount similar to what they're doing a month in sales. If they're doing $50,000 a month in the restaurant and revenue, they can generally get a quick $50,000 loan this week, remodel that place, put a new patio on, extend their kitchen, put a new wing on, run an advertising campaign, whatever it is, drive more revenue. There's no collateral required to get these loans, as we've said. They're signature loans. Look at these simple qualifications. As long as they've been in business from left to right there 4 months, they meet our requirements. All 50 states, we can do loans. Their personal credit score only has to be a 500 or higher. It's very difficult to get below a 500. All right? We've helped people with bankruptcies and judgments, etc. 500 FICO score or higher, they meet the qualifications. If they're over 650, they're going to get a better price, of course. But we can get them a loan at 500 FICO score or higher. Their annual revenue must be $100,000 or more, or they don't meet our minimum requirements. That's revenue. And we've got over 700 different industries we serve. Now, look at this simple process that you would take a client through. First of all, they would go to your website. We've got a David Allen Capital website for you. There's no investment. You get that given to you. Excuse me. They go to your website. They fill out an online pre-qualification form. We are instantly notified, and we notify you that a client filled out this form. All right? If they're pre-qualified, which most times they are, we then ask them to fill out a one-page application and give us some minimal documentation, bank statements, etc. We then get the loan offers from our clients and present those terms to your client. All right, 80% of the time they accept those terms. 80% of the time they accept the offers, and then we get loan documents ordered via email. It's sent to them. They sign those documents, and then they are funded with the loan, all within a week. You get compensated usually the second Friday after they're funded, sometimes the first Friday after they're funded. So we're talking really quick. Now, what are the rates, right? What does it cost for a client? Everybody asks that. What are the rates? Well, we want to share with you a different way of looking at this. We call it a total cost of capital versus rates. Business owners love this mentality. Most business owners, when you talk rates, they're thinking an annual rate. Well, there's compounding rates. There's daily compounded rates. There's simple APR. There's annualized. There's all these different definitions of rates. Okay, just like definitions of apples. There's a bunch of different kinds. All right. So we go real simple to a business owner. We're going to tell you your total cost. You're borrowing 100, you're paying back 126 as an example. All right. They get it. They see their total cost of the loan quickly. It's 26 grand in interest. They're getting 100, they're paying back 126. Every business owner gets that. So typically our loan cost is 1.2 to 1.3 times the loan amount, like you're seeing there. Borrow 100, pay back 126. If they're higher risk, it'll be 1.3 to 1.4, and the highest risk are 1.4 to 1.5. Again, does the total benefit of the money outweigh the total cost? Let's look at the worst case scenario, 1.5. $100,000 loan, you got to pay back $150,000. Someone may say that's too high. Right? Well, it's not too high if you're a business owner and that 100 grand is going to open a new store and you're going to do $50,000 a month in revenue in that new store. You don't mind that it costs you $50,000 in interest that's tax deductible to open that store. Okay, or you've got a restaurant and you want to expand, or you're in a tight financial pinch and you can't make payroll. And if you make payroll, you'll keep your business open, to keep the doors open. Or you've got a new job as a as a landscape developer, and you've got a whole, bunch of new jobs you can get, but you need a new crew and you need new equipment. And that 100 grand, if you had that 100 grand to buy equipment, you'll do 50,000 a month in sales. You don't care that it's costing you 50 because your total benefit far outweighs the total cost. So we don't ever judge whether someone's going to want the loan. Again, 80% of the time they accept the offer because their total benefit far outweighs their total cost. Now, when they apply to us, there's no application fees, so we can get them an offer without them spending a dime. There are origination fees if they accept the loan. We don't charge them. Our lenders do, usually 0 to 2.5%, and it's deducted from the wire. So again, if they got $100,000, and even if it is 2.5%, they got to pay $2,500. They don't have to come to closing with $2,500. It's deducted from the $100,000 they're sent. So they'd only get $97,500 deposited in their account on that $100,000 capital advance. Okay. Now their origination fees could be as high as 10 points. We've seen that once in our history. We don't expect to see it very often, if ever, but we wanted to say it because we'd hate for you to say, hey, wait, well, you never said. This is a worst case scenario. This is a super high risk client that was really declined, that we were able to talk them into giving them a starter loan, and they would do so, but only at a very high origination fee to reduce some of their risk. Okay? So just know that there are origination fees deducted. Now, check this out. What helps get a lot of clients funded and helps keep them from defaulting is what we call pain-free monthly payments. What they do is they determine what you can pay monthly or should pay monthly, but they deduct it daily through what they call daily micropayments. This is so much easier for the business owner. Check this out. Let's say you had a $6,000 monthly payment. Well, each month you got to make sure that $6,000 is there by the first of the month to make that payment. You've got all kinds of other bills due on the first as well. So that creates an opportunity or a risk for default, which would mean less approvals. But in the fintech industry, this new development of alternative lenders, they realize that if instead of getting $6,000 once a month, they say we're going to take 20 payments out every banking day, we're going to take out 1/20th of that monthly payment. And you're going to give us $300 a day automatically deducted. The end of the month, they got their $6,000 paid, and everybody's happy. They don't even feel the pain. Again, their cash flow got them approved. It also got them paid off. They wouldn't have gotten approved for that $100,000 if they weren't doing $100,000 a month in sales, right? So they're doing $2,000 or $3,000 a day. They're not going to miss a $300 payment coming out of that $2,000 or $300 or $2,000 or $3,000 a day. All right. The borrowers easily stay current. The lenders approve more loans. You get paid more money. And we also give a real easy to understand offer to our client. We show them, here's your total loan amount, $25,000. Here's your pricing factor. Here's what you're going to repay back over 9 months. Here's your daily payment. So it's real easy to understand. They can look at it and say, is the benefit of this 25 grand, does it outweigh the 31,000 I'm going to pay back over the next 9 months? It's real simple. And if they choose to proceed, again, 80% of the time they do, you get paid and they benefit. Now, many of them come back again. They like our loans, and we have something called renewals. So they'll actually have the opportunity, even before they've paid it in full, to get a new loan with us. What our lenders do is they say, once you've paid off 50%, we'll consider renewing you the same loan. So let's say they started with a $100,000 balance. They've paid off $50,000 of that principal, and they owe $50,000 still. They're halfway paid off. Well, they're now eligible. They could come back and get a renewal, a new $100,000. Of course, 50 of it has to pay off their first loan, right? So they would only net $50,000, but they just got new 50 grand, and you get paid again. And they can do this again and again and again, and you continue to get paid. See, the clients have the comfort of knowing more money is available. They can get creative on ideas on how to grow their business. It's really, really good. So why do our loans make sense? Let's end this before we talk about how you get paid. We serve bankable and unbankable clients. I mean, some people can get approved at a bank, but they can't wait the 3 months. Time-sensitive opportunities. They don't want to risk waiting. They don't want to put all their homes up on collateral. They're bankable, but it's tiresome. It's old, slow, and no. Or there's unbankable, just can't get approved. We can help them both. Time sensitive, you got an inventory discount, you got a new job you want to pursue, but you need more crews, you need more equipment, you need more space, your business is blowing up, you've got 4 stores already, you want to buy the 5th. All right, or you can't make payroll, or you have taxes due, or you got a big order coming in, you owe on the product you already ordered, and you have to pay for all that inventory, and you need to pay for it now, otherwise they're not shipping it. Things like that. And again, if the cost of the capital is less than the benefit of the capital, you proceed. If the cost of the capital is too high, then you don't proceed. Again, 80% of the time a client proceeds. So if you own a business, could you see how this could help you? It gives you flexibility, doesn't it? Simple and fast flexibility. Yes. And that's why we're doing so well in this industry, is soaring, and why David Allen Capital is soaring. Okay, very profitable our first year, and we anticipate being a lot more profitable this year. We're helping clients and we're attracting clients. That's what you would do. You would simply bird dog clients. You see how good our loans are. You see the need for it in the market space. You simply refer them to your David Allen Capital website. That's all you do. We call it bird dogging. We take it from there. Our internal client support team actually takes over, as we talked about earlier, from there. All right. So what we say is get started by informing every business owner you know and every person you know that you're a small business loan agent now. You never know who they know, who's trying to grow a business, expand a business, get through a pinch. So you inform every business owner you owe. We also do something called canvassing as a customer. When you're in eating dinner somewhere, you just ask to talk to the owner. Talk to them real quick. Let them know you're a small business loan agent. You got someone who sells medical equipment and they want to have this in their tool belt in case that doctor can't afford that equipment. They can take a loan with us. You sell advertising. You want your clients to be able to buy your press advertising, TV spots, whatever. They don't have the money. You represent them. You refer them to us, and they become a loan client, and they also then buy your advertising. But canvas as a customer, inform business owners you know. And then cold canvassing and networking at chambers of commerce, business network meetings, etc. Of course, it's just network. Let me give you a sample of what we say. It's how easy it is. All right, we just ask to introduce ourselves. Is the owner in? You're eating dinner. Hey, is the owner in? Can I talk to him? They come over. Hey, Bill, my name's Dave. I just want to introduce myself. I'm a small business loan agent. We represent lenders who actually like to lend to business owners. We're simple and fast. In fact, Bill, we can get you an answer in a day, funding in a week. So, hey, if you ever in a tight pinch or you ever have an opportunity you want to pursue, we'd love to help you. Our lenders, they value your cash flow more than your credit score, so we have programs for all types of businesses. And man, if I can ever help you, I just want to introduce myself and give you my card. And guess what? You just do that over and over and over, and the word gets out, just like someone who sells homes continues to get the word out, and people, when it comes time to buy or sell a home, they reach out to that agent. You do the same thing. It's that simple. And every time a loan funds, you get paid. So let's talk about how you make money. Compensation plan overview. First of all, we're a results-based compensation plan, as I said earlier. Funded loans are the only things that create income, not efforts. All right? There's no guarantee of income at all. You can actually earn zero, yet there's no income ceiling either. All right? Flexible, huge upside, no guarantee. Let me read a statement. The disclaimer at the bottom of your screen there may be hard to read, so I'm just going to read it for you. All statements are for mathematical demonstration only. No income is earned unless customers are funded loans. Any income scenarios or examples shown in this overview and training are not typical and should not be expected. Never expected. These are results based, but we're going to show you percentages that you would earn, so we've got to give examples to clarify. Doesn't mean you're going to earn it, all right? Our comp plan is designed to allow you to make a full-time income from personal efforts alone. It's designed to do that, but only through you producing results, right? Our culture is all about you attracting new clients by offering them quick and simple capital and then helping them proceed forward to get that quick and simple capital, all right? And most of the commissions we pay out are paid out to you or other agents for landing those loan clients and helping them get funded. Right? There's no income for referring someone to a website. There's no income for that person getting approved for a loan. There's no income for leads. There's only income if a funded loan takes place, which again, 80% of the times we get an approval, it turns into a funded loan. Pretty darn cool. But we have other ways you can get paid too, so I just want to share it. Number one, DAC direct pay. That's to you as the agent, as we talk about when you secure a funded client. But much like Century 21 expanded through through addition by saying, hey, we'll allow you to be a broker and build an agent team. And you support and take care of that agent team, and we'll pay you off all the homes your agents sell. Not just you, not only will you make when you sell a home, but every time you recruit an agent and they sell a home, we'll even pay you on their homes. Okay? That's called team bonuses, right? We allow you to do that. We allow you to personally enroll other agents who they too can get started as a DAC agent and have the same agent opportunity as you. And they can go out and make significant commissions for getting loan clients funded loans, and you earn every time they do it. Is that not cool? Now, they can do the same thing. They can build an agent team. We'll even pay you on their team, some of them. All right? So we want to encourage you to support and coach others and get paid for it. And then we've got something called Longevity Team Overrides. Again, Longevity is a direct sales company, and they pay through 9 different generations of agents who were referred. We don't do that, but Longevity does. So the good news is, by being part of David Allen Capital, not only do you get payment number 1 there, direct pay, payment number 2, team bonuses on anyone you enroll, but number 3, Longevity will pay you because we're now part of their company. They'll also pay you an override on any production done in your agent team through 9 levels you can qualify for. Pretty darn cool. So let's talk about this quick. The first bonus type was the direct pay. That's personal commission. That's what you want to focus on. Again, it's results based. You're going to average 2 to 4% of the loan amount. Example, a $50,000 loan funded, you'd make $1 to $2 grand. Now, the neat thing is you determine whether you're making 2 to 4%, 2, 3, or 4, or somewhere in the middle, because your loan production in the prior month determines what you're doing this month. Every time you close a month out, you can earn more the next month by how strong you close out this month. Let me give you an example. For each loan that is funded, we assign what we call a bonus volume. Bonus volume is not what you earn. You get a multiple of that. All right, but it's just a number we put into the calculation formula, if you will. Bonus volume is generally 1% of a loan amount. So if there's a $100,000 loan, it'd be $1,000 bonus volume. Now, sometimes it's a little lower, rarely, and sometimes it's higher, a little more often. But the average is about 1%, so we're just going to use the average, $1,000 in bonus volume. Now, you get a multiple of that personally. You're going to make anywhere from 2.5 times that to 4 times that, which would be $2,500 to $4,000 you would earn in that range on that $100,000 loan on average. Again, that's where we get that. Your average commission is 2 to 4%. Now, you make 2.5 times to 4 times that bonus volume. How do you determine whether it's 2.5, 3, 3.5, or 4? Your personal production determines that. You determine whether you're getting 2.5 or 4 times bonus volume. See that ladder there on the right? That's a ladder that you can climb. The minimum is 2.5 times that you'll earn on bonus volume of every loan you do. But if you climb up the ladder, see how it says in the middle there, 2 loans last month? See, if you did 2 funded loans in the prior month, this month you're making 3 times the bonus volume. If you did 4 loans in the prior month, this time you're making 3.5 times. If you did 5 loans last month, funded loans, then this month you're starting out, you're making 4 times the bonus volume on every loan you do this month. So, of course, our goal is to help you maintain as many loans per month as you can. The good news is your first full month, you start at 3 times bonus volume. Let me give you an example. You start September 15th. That's not a full month, all of September. It's only a partial month. You make 3 times. October, that becomes your first full month. You're still making 3 times the bonus volume amount. Now, November, you're going to look at your prior month. How many loans did you do in October? That's going to determine what you earn in November, 2.5 to 4 times. Same with December. We're going to look back to November. How many loans did you fund in November? That determines whether you're going to make 2.5, 3, 3.5, or 4 times bonus volume in December. Let me give you a quick example. $100,000 loan, that'd be about $1,000 bonus volume average. Again, you're going to get 2.5 times to 4 times bonus volume. That's anywhere between $2,500 and $4,000. What if the bonus volume was a little higher? As I said, many times it is. Let's say it's 1.25%. Now bonus volume is $1,250. You're still getting 2.5 to 4 times that, which would be a lot more money, $3,100 to $5,000. All right, so you could actually earn higher. You see there, that's 5,000 of 100,000. That'd be 5% of the loan amount. So you can earn higher, but we say on average it's 2 to 4%. All right, so this is your personal commission. See how that works? Your prior month's volume determines this month's pay. So we always want activity, and we pay you very well on those loans. Now, the second type of bonus we call DAC Enroller team bonuses, remember? And that you can earn on any agents you personally refer. You're not limited by territory. You can have as many agents as you'd like. They can also build an agent team, which we call your extended team. So what do you earn on them? Well, let's say this is you here. You refer me, and I become a brand new agent. I'm excited. I go get my first client, $80,000 loan. Again, we talked about 1% is the average bonus volume, so that'd be $800 bonus volume. I'm earning 3 times bonus volume my first month, right? So I make $2,400, 3 times the bonus volume. I'm pretty excited. I made $2,400. Again, this is just an example. Well, you enrolled me. You earn anywhere between 50% and 125% of the bonus volume on any personally enrolled agents. So right there, I did $800 in bonus volume. Let's say you're at the minimum, 50%. You're going to earn $400 on my loan client because you referred me. Do you want to help me help? You want to help me help a lot of businesses? Yeah, the more businesses I help, the more you earn. Do you want to help me understand this better? Yeah. Do you want to help me produce more results? Of course, you earn more. Just like that real estate broker in your local town's real estate office. They do better when their agents do well. So they want to support them, of course. All right. So how do you vary between the 50 and the 125%? On the people you refer there, as it shows? Well, it starts out, no matter what, you earn 50% of the bonus volume on your first level, your personally enrolled agents, okay? Once you've funded one loan, you still earn 50% on your personal referred agents, but now anyone they refer, you earn 50% of the bonus volume. So now you're paid on 2 levels of agents. Support them both, of course. All right. Once you funded 3 loans personally, now you're making 75% of the bonus volume of the people you've enrolled and 50% on level 2. Check this out. When you've got 6 loans, you actually get 100% of the bonus volume that is earned or created by the people you've personally enrolled. Okay. Give an example in a minute. In that last example, it was $800 business volume. You'd be getting an $800 check because you're getting 100% of the business volume. Isn't that cool? Or bonus volume. You also get a third level here. And then once you've funded 15 loans, you're making 1.25 times the bonus volume on anyone you personally enroll on their funded clients, 50% on the ones they enroll, 50% on the ones they enroll, and 25% even on the ones they enroll. This is on their bonus volume, of course. All right? Now, the neat thing is, once you get to that 15 loan mark on the right, you remain qualified. You get to stay there as long as you have at least one funded client every 6 months. That's what we determine as active. And that can even be a renewal. Okay? It doesn't have to be a new client you get. It can be one of your old clients renewing a loan. All right, but let me give you an example of how these numbers work out. All right, here's you're making 2.5 to 4 times the bonus volume on your personal clients, which is pretty cool. And look at there on the right, that's what you're earning on the people you introduce. So let's say you introduce 4 agents, me being one of them. I'm excited. I'm talking to people about loan clients. Maybe someone else isn't as excited. You just never know. But let's say those 4, some of them decide to introduce some agents themselves. And if they each introduce 4, well, that'd be 16 agents on your second team level. Right? Now, it's not going to grow this perfect. This is for math, showing multiplication of efforts. Those 16 do the same thing. You'd have 64 on your third level, 256 on your fourth. Now, That's as deep as we pay in roller bonuses, all right? Now, you can support that team. Can you introduce more than 4 personally? Yes. Is there any guarantee that you'll introduce 4? No. Can those 4 introduce more than 4 so you'd have more than 16? Of course. May they introduce none? Of course. All right? We can't guarantee anything. This is just to show you mathematic multiplication rather than addition. Okay? Now, in this example, let's say 3/4 of them do nothing. But a quarter of them, 3/4 of all those agents do nothing this month. But a quarter of them do one loan at $80,000. One loan, which would be $800 in bonus volume, right? 1% of the loan, bonus volume. Well, you earn those percentages up there. Let's say you're at the 15 loan amount and you're making that 1.25 on first level agents, 50% on second, 50% on third, 25% on fourth. Do you realize your income, if 1/4 of these agents all just did one loan, your income would be over 20 grand that you earn this month on their efforts. If they did the same thing next month, another 20 grand next month. This is on their efforts, not counting your loans. Very rewarding to build an agent team who can produce results. Even if you fail this by 50% and only 1 out of every 8 got a loan, you'd still make over 10 grand per month just on 1 out of every 8 agents getting one loan at 80,000, right? So this shows you this can build over time, but it also shows you the value of having good quality people. Now, the third bonus we call the Youngevity 9-level team override. They pay small percentages. You see there it's starting at 8% and going down to 2. You can qualify for these through production. You have to qualify and you can learn more in their pay plan. This is a smaller part, but I want you to know it exists. All right, can be larger if you have a large team, of course. If on an $80,000 loan, $800 business volume, again, any of your personally referred people, you'd make $64 on that loan. And when they referred another $64, this is in addition to what we already paid from DAC, right? This comes from Youngevity, 7% on level 3, etc. All these $50 bills and $40 bills are coming in on any agents on those levels that did that loan and produced that $800 in business volume. Okay, and if they did any other Youngevity products that produce business volume, you would earn these percentages on that business volume as well. So again, we're a results-based pay plan. We have an incentive for you to acquire more personal clients each month because you determine whether you're making 2.5 to 4 times bonus volume based on what you did your prior month. So everyone's working hard. Your team will work hard. All right, results-based. There's also an incentive to help at least 15 clients. Why? Because that moved you up that enroller bonus tree. Remember, you can make 125% of your direct enrolled agents if you've got 15 loan clients, and you can get paid through 4 levels. So everyone wants to get to 15 as soon as they can. Don't forget renewals count, and no funded clients equals no income earned. All right? Very results-based, very lucrative possibility. Now, we train you. We're going to give you a simple system to follow, video tools to train, easy to learn and get up to speed, very much a tool culture videos. We've got a resource center with resources in it. We've got a live weekly call. We've got team leadership calls. We've got local, regional, national events. And, of course, we got coaches, other agents who are here before you, who are experienced, who want to help you succeed. They benefit when you succeed, of course, but they want to help you out of the kindness of their heart. We're at 30 minutes, so I want to wrap this up. There's 3 types of people who see this presentation every time. The first type says they don't have interest. The second type is possibly interested. And the third type is interested and ready to get rolling. Let me just say this. If you're the first type, we understand we're not for everybody. Thank you for investing this 30 minutes to learn more. Maybe you know someone this would be a perfect fit for, and you can refer them to the friend who asked you to watch this video. If you're possibly interested, think about it. Ask them for more information. Go to our website, davidallencapital.com, and view more. They can give you their link so that you can view more. And if you're interested and ready to get started, then you want to get started right away, of course. And what we've got is called the 4 steps of getting started. Then I'm going to ask you to watch that video. If you look in the comments below, you'll see a link to it, or the person who referred you will ask you. Or you can get started right now, davidallencapital.com/their ID number. Whatever their ID number is, you can get started. But I encourage you to watch the 4 steps of getting started right, so that you can start fast, start right, get off to a fast start, and succeed. Again, there's no investment required. We'd love to have you. 3-4 years from now, you'll be hearing David Allen Capital all over the street. We're the fastest growing independent loan brokers in North America. A license is not required. We want to be the biggest. We plan to be the Century 21 of small business loans, and you can help expand it and benefit from all the loans that are moving in your area. Again, thank you for watching. Just let them know whether you're a 1, a 2, a 3. And I encourage you to watch the 4 steps of getting started. I just say thank you for watching. Welcome aboard if you're ready to get started. And again, if you're not, we appreciate your time. This meeting is now officially over.